Hey friends, welcome. This is Jay Author and I'm making this presentation on behalf of retirementtransformation.com. And in this presentation today, I'm going to talk about top 10 investment mistakes which you should not make. It's a very important financial tip for your retirement, so make sure you listen to this very carefully and follow these important tips to bring miracles in your life. Because half of the knowledge is knowing what mistakes not to make. This is going to be a long presentation, so bear with me, but pause the video, watch everything, follow everything. Now, it's a standard disclaimer you'll see in all of my recent videos here. I'm just communicating to you that this is all for information purpose. Pause the video and read it if you want to. Now, the mistake number one is putting all your eggs in one basket. Now, what does that mean? Well, it means that you need to minimize risk through asset allocation and optimize your portfolio through diversification. If you want to know a little bit more about this, I have done several videos on how to do the asset allocation and how to optimize portfolio through diversification. All of that is there, so I'm not going to talk about here. You can watch all those videos. Mistake number two is that there are many who say they don't want to take any risk and they want to basically park their money and in government saving bonds or guaranteed income certificate schemes, or if you're in Canada, then Canada savings bond, and if you're in US, then United States saving bonds, and all of those bonds where the returns are very, very low. It's almost like, not even sometimes protecting against the inflation. So don't park your money, but invest your money, because inflation will eat away the compounding interest of low yield instruments. Remember that you want to invest money. Don't simply leave money because that's nothing more than the cash protection. Mistake number three, don't try to beat the market. I've done a very specific video on this, that no matter what you do, you can beat the market once, maybe maximum twice. I don't know, maybe more than that. But if you look at overall, it's pretty hard to beat the market. So, do you remember that the tech craze of 90s? How many millions of people lost the money? Ask them, can they beat the market? Well, you can beat the market once, twice, as I said earlier, maybe this month, next month. But after overall, you have to see the long term. It's not possible to beat the market. And I've also done another video on the 7% portfolio solution. Watch that video. It's very, very intense knowledge for those who are interested in the investments. Mistake number four, procrastination turns attainable goals into the impossible ones. What does it mean? If you are just starting your career today and you're 20 years old, put the plan today. You will go the long way. If you delay it by 5 years, 10 years, 20 years, imagine how difficult those goals would be for you. So if you're watching this video, don't delay. Put the plan now, because the best time to start investing is today. Mistake number five, don't allocate and diversify your portfolio, because you haven't allocated and diversified your portfolio. What do you expect? It may go up because it's heavily invested in a specific market or segment, and if that segment is doing good, you can do good. But if that segment tanks down, guess what happens? You lost major part of your savings. So there was a study done by Merrill Lynch, and they said that investment advisors believe the failure to observe basic investing fundamentals like asset allocation or rebalancing are the biggest mistakes their clients make. I think it has tremendous merit. So pause the video, pay attention to this, and don't make this mistake. Mistake number 6 is Don't misjudge your risk tolerance. You need to know how much you can tolerate. So don't assume your risk more than what you can deal with. Your retirement assets must support you throughout retirement. Don't think that you investing only until the start of retirement. Whatever you're investing today is for the throughout the retirement. You need all of those funds. It's very, very important that whatever assumptions you have, those are realistic assumptions, and those are those assumptions which you can deal with. Because after taking those decisions, you can sleep easily. If you don't, that means you haven't taken the right risk. Mistake number 7 is don't try to time the market, because the best solution is to buy good securities and hold on to them. Knowing which market and sector and when it will outperform is impossible. Don't believe me? Maybe just watch another video I've done on this, some of this, because it's not possible for me to share everything over here. Mistake number 8 is know what you own. Easier said than done, because it's pretty hard to know if you are basically investing very heavily in numerous mutual funds, because you don't know what you're really investing in if you really don't look at those documents. So you need to look at all those documents and see what you have invested and where you have invested. You need to know what's included in each fund, because then you can rebalance your funds if required. And I've done another video on that. Mistake number 9 is underestimating the impact of taxes, inflation, and compounding. Well, the power of compounding should never be overlooked. And remember this, unnecessary taxes and inflation can eat away your compounded returns, which could impact your retirement funds. Mistake number 10, which is the last one, is no goals, no plans, and no realistic expectations. If you're just thinking about doing something and you haven't put any plan, you haven't put any goals, that's just a dream. So, if you want to build a house, you better have a plan in place. If there's no plan in place, how can you build a house? It's as simple as that. If you want to have some investment goals, then you need to have a plan in place. You need to know how you're going to achieve that. You need to know how much you're going to achieve this year. You need to know how much you're going to achieve in 5 years and how much you're going to achieve in 10 years or 20 years. So if you want to succeed, develop and write down short range, mid range, and long range goals. And quantify these goals. And then develop a plan to attain them. Now, the short range is 12 months, I'm talking about. Mid range is 1 to 5 years. And long range is anything over 5 years. I hope that helps you to understand what's the definition of short range, mid range, and long range goals. Now, I've done a video here how to build your portfolio, and I encourage you to watch that. But remember, if you don't plan anything, you can't achieve much. So plan first. These are the standard 4 portfolios which I've suggested over there. You may agree, you may disagree, that's fine. But whatever you do, at least do something. So use this knowledge of the top 10 investment mistakes, because if you know what are the mistakes you need to avoid, you can go far away in your life. And that's what the intent is. The intent is to balance out that knowing what needs to be done and also knowing what need not be done makes a big difference. That gives you the complete story. And my intent here is to give you the complete story. So, did you notice that the small changes in life at the right time can make the big difference? Of course, yes. What is the small change I'm asking for? Have a plan. If you don't have a investment plan, have a plan. But retirement planning, and I I advocate for comprehensive retirement planning, which includes investment plan also. Why not go for that? Because you can do that. You can develop your comprehensive retirement plan with the help of retirement wheel planning process. Once you do that, you can see here that it takes care of all the aspects of your life. And that's the beauty of the wheel of retirement life planning process. Because that's the only tool available for comprehensive retirement plan development. So plan for your retirement logically with the help of the retirement wheel and not emotionally. Because if you really want a solid comprehensive retirement plan, then you need to immediately take the first step, which is go ahead, check it out at retirementtransformation.com/blog. There are tons of free information over there on retirement planning, on financial investment tips, on all kind of various life aspects. So you have nothing to lose. It's all for free. Why don't you go ahead and check it out? So take the action now. And with that, I want to say thank you very much for watching this video. And I hope you enjoyed this video, because you can use all of this knowledge for putting your investment plan. Now, bye-bye.